Why are gold and silver stuck? Check the video out to see why. This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions. This is Dan Max at eXp Realty, aka the trading agent, doing a little video on why gold and silver are stuck. A lot of people are asking me like what's going on with gold, silver, and the miners. They seem to be stuck. They're not really acting that well. You know, what the heck is going on? And so what I wanted to do today was just talk about the 4 reasons why I think gold and silver and the miners are stuck. Let's get into it. So number 1, quad witching. If you don't know what quad witching OPEX is, here's Investopedia. Go to their website. You can check it out. I mean, it just refers to all of the options, futures, and sorry, my cat was jumping on me. Futures simultaneously expiring. So there's tons of contracts at the end of a quarter. So obviously it's March, June, September, December every year, where there's a ton of what I call pin action. And pin action is where the market makers, the specialists, they really want to get the markets that they're specializing in, that they control, to pin out at certain levels so that the most amount of options expire worthless. Futures contracts expire worthless, whatever you want to call it. You know what I mean? The product, they want to pin it to a price so that the most amount of clients will lose. Clients, more like traders. I apologize for the wording. Actually, traders lose. So that's the first thing that's really going on this week. It's next week. And if you didn't know, it's the 3rd Friday of every month. But remember, the 4th, or every 3 months, the quad witching refers to the ones for every quarter. So March, June, September, and December. Number 2, the FOMC rate decision. The Feds have their open market committee decision. And think about it. If the Feds announce that they're going to raise rates next year, they're going to announce that they're going to cut off liquidity, whatever they're going to say, the market's waiting for that. Money knows that. And so what they're going to do is position themselves to not act until after. I tell this to everybody who follows me and all the people who are in our Discord room that the first, in any action, the first mouse gets the trap, the second mouse gets the cheese. So I love to wait for the news and then trade the reaction. And if you think about this from the FOMC rate decision, I mean, it could have a huge effect on gold and silver. So think about what a lot of the market players and participants are waiting for. The longer it stays lower, I really think the better it is ultimately, because that means you can get in at these bottom basement prices, but people are getting very anxious trying to get ahead of the market. And so when they're doing that, think about what that means. You know what I mean? Like, people are getting super anxious, and this is the thing about traders don't understand, is this is why I say day trade smaller amounts, swing trade bigger amounts. Well, guess what? When you're playing with time, you position yourself not all or nothing, but you buy in pieces. You buy at levels. Think of Jessie Livermore. Think of the greatest traders. All or nothing trading is not what the big money does. So think about what smart money is doing with the metals. They're probably accumulating down here. Look at the volumes have been spiking recently. Call it what it is. Smart money's probably waiting till next Wednesday to create the trap. And what I mean create the trap, think about FOMC days. If you've traded long enough, you've seen the market go crazy all over the place. Well, it unleashes a lot of liquidity. So they're waiting for the liquidity. At this point, if I'm buying down here, if in my other videos you can see I'm buying the backside of this trend line. I'm buying this old area. I think it's a free money zone, which we'll go into here in a little bit. But that's the next reason, the FOMC. Just keep that in mind. What's next? The end of year tax selling. End of year tax selling is a big deal. Think about it. If something's not acting well, you're going to sell something that's down to sell against the winner so that you pay minimal amount of taxes. That's what's going on here. It seems like in gold, silver, and the miners, people are just taking profits, but also taking losses. And keep in mind, you have to think about where a stock is coming from and where it's going. If you look at, say, gold, you can see from the beginning of the year, 183. If you're down in the 160s, that's down. There's not a lot of stuff down for the year. So guess what? Gold, silver, miners, you're going to be tax loss sold. If you don't know what I mean, kind of Google it, check it out. It's not complicated. The last thing is seasonality. If you know me, you know I love the seasonality of gold and silver in the end of December. And we're going to go back in the Wayback Time Machine as we're talking about, because what you'll notice is middle of December every year starts a nice run into the spring. And by spring, I mean February, March, sometimes even April. Because this phenomena, I mean, I can go back forever, and you're going to see it. And hopefully this is the one thing, if nothing makes sense, I hope this makes sense. Because what you're going to see, for the most part, like 7 out of 9, 8 out of 10 here as we do this, you're going to see nice, strong moves. Okay, here, let's just start at 2011. Middle of December, bam. Nice run up. Nice run up. That's 2011. 2012 was kind of an interesting year because the gold was in a bear market. It did pop in mid-December off the lows, but it didn't really go anywhere because it ultimately got crushed. So that's not that year. But here we go. 2013, the train must continue on. 111 to 134, 25%. Nice up move. Here you go. December, 112 up to 125. Nice little pop into the spring. I mean, a lot of this has to do with seasonality. Just keep that in mind. Here you go, 2015. This was a nice one. I remember this 100 up to 122. I mean, again, 20, 30 points. Started actually a big run. That was ultimately one of the bigger bottoms for gold. Here you go in 2016, bottom mid-December. Nice run up. I mean, I hope this is obvious because you're going to see this in multiple circumstances. 2017, gold popped up right off the lows mid-December. And again, if you don't get anything out of this video, just mid-December, gold bottom, run up. Here you go. I mean, it backed up a little bit, but boom. I mean, you can see the seasonality is from the end of the third quarter or end of the fourth quarter into the first quarter every year. Gold typically pops. Here you get them again in 2019. I hope you're seeing that. So let's get into actually the gold, silver, and GDX charts real quick, just to like get you comfortable with what I think is coming up next week. And I'll try to end this as soon as possible shortly after that. So what I see with gold right now, it's in the areas that I like to buy. Could it wash out and lower? Absolutely. Buy more. I think you can buy more for that run up. I don't know what the Feds are ultimately going to say, because I think the Feds are kind of in this pickle. You can't raise rates in this economy because they're stuck. So inflation's here. And so I think what's going to happen is next year the metals are probably going to lead. So this might be ultimately one of the best bottoms to buy. So I'd be looking in this area in the 165s all the way. I know there's a wide range, 158. But have your stops, and you can always rebuy or be a little late. Just keep that in mind. So I like gold here. If you look at silver, this is what, I hate the SLV. Everyone who knows me knows I hate it, but I have to watch it. This is the silver monthly here. SLV monthly. I like this area in blue. You can see it was resistance, broke through it, was gone. Chop, then fail, hit it and failed. Now we broke over it. Now we're sitting right back in it. I mean, you have to look at support equals resistance. This is a good area to look at buys. So I like that. I like silver here, the SLV, however you want to play it in these ranges. GDX will end it here. It's kind of sloppy. Look at it in this 30 area. I like it. Could it retest 28? Man, that would be a gift. But let's zoom out, because that's always where you start from. This ETF is trading basically where it IPO'd in 2006. I mean, I've been trading this thing for off and on for 20 plus years almost. It feels like almost, I guess it's only 15 years, but nugget, all that stuff. This zone is always important, the 30s. So if it got back to this downtrend or this up channel and 50-month moving average in the 28s, you go hard at this. And you put a stop in if you need to, but you go hard. You can buy nugget. You can buy all sorts of crazy, I think, leverage products at that point with stops. So I hope this helps. Again, please check out the Discord room. We talk about gold, silver, and the miners a ton. It is one of the sectors that I follow religiously. You'll see in the Discord room. We love gold, silver, and the miners. Thanks for watching. Long term. Please subscribe if you like the content. Also smash the like button, share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.